Hi, I'm Finn Kelly, and today I want to talk about Investing 101. Unfortunately, when it comes to investing, it can be quite overwhelming, and that's generally because we have a lack of understanding of what it really means. When I think about investing, it's really about giving you a chance to actually build your financial assets and ultimately get rich one day. There's two ways to get richer. You can either save more or you can earn more. But ultimately, there's one thing you need to be doing with those funds. You need to be making sure you're investing in them. Because unfortunately, these days, putting money in the bank isn't going to get you the return that you need. So when you invest in something, you're ultimately handing over some capital being your initial funds in the bank account, in order to be able to get some form of return, either through capital growth or income. So let's talk about some of these terminologies. Capital growth is simply when you purchase an investment and over a period of time, you're able to sell that investment for a higher amount. So you can think of a property, you might buy it for $500,000, and after 10 years, you might be able to sell it for $1 million. What's the difference between the two is $500,000. That is capital growth. Now, during that period of time, you would have also been paid some income through the form of rent. And that is what income is. It's the ongoing regular amount of cash you receive back in form of loaning that capital or having that investment. So that's two really important things. Another thing we call is liquidity. Liquidity is very important when it comes to investing. Liquidity is the ability you can access your investment pretty much at a predefined point of time, maybe by press of a button or selling something. Now, some investments are very liquid, others are very illiquid. One of the great things about the share market is it's very liquid. At any point of time, you can press a button and within 3 days, you'll get your money back. Unfortunately, with property, it's quite illiquid. It can take a long time, 6 to 12 months before you can sell a property. And unfortunately, you can't sell parts of your property off. You can't just sell a bathroom off if you wanted a couple of $100,000 to do something. So you need to be looking at these type of things when you're taking into account your investment strategy, because you can have a great investment strategy, however you may need money short term, and if they only have illiquid investments, you can actually have to sell at very cheap prices. Other things with investing, don't feel like you need to be making these big crazy decisions. You can start with as little as $100. These days now with technology, you can be investing $100 per month into something like a diversified share portfolio, and that's something we can all find an extra $100 a month. And over time that will build up and you can start allocating more funds to it. Another thing I don't like to hear about is people playing in the share market. We don't play with investments, like we invest, and we actually make sure that we're very aware of what the underlying investments are and how these play to our life. So with investing, it's not really that complicated. All you need to do is make sure that you start now, you put regular amounts of funds away, and just set and forget generally. Like the more you do this, the more you'll build up wealth.